Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea on a really interesting day, just to give you a window into how we blow things up. Yesterday afternoon, after Paul Sweeney and Scarlet Fu, markets sort of fell apart, banking. I assume many of you know the story. And then overnight, you see how Asia opening at about 7 p.m. New York time, and then over to Europe, how the reaction is. The reaction was not good. On a correlated basis, looking at equities, bonds, currencies, commodities, it was, there was a whole new review here of what are we doing in private credit? What are we doing in some of the more esoteric things that harken back to 2005 and 2006? We blew up the show. Randy Schwimmer, Churchill, thank you for joining us on short notice. On short notice, Christopher Whalen joined us just out with the second edition of his new book, Inflated. Chris Whalen on the derivative moment.
Well, they're dealing with a private market where there's no visibility and no price transparency whatsoever. A lot of investors have been buying stuff that they don't understand, of course. And there's, the endowments, the big pensions, the universities, everybody's been involved. They've been selling this stuff to retail too, Tom. Think about that.
I don't disagree. I mean, they all want to make 200 beeps, right?
Well, they're following Warren Buffett's model. Go buy an insurance company. So you have Apollo, Ares, Brookfield, everybody's in this game, and you're going to read about this. They've moved a lot of this exposure offshore.
A raging debate. That's Chris Whalen, again, an author out with his book Inflated, and of course Whalen Global Advisors. I can't say enough about that's an opinion. There are many different opinions out there, and our goal into the end of the year is to give you a cross-section of views. The one thing everyone agrees on is there is a wall of money going into alternatives, to use a phrase, as well. Our alternative was to have Ben Laidler with us. He nailed it early in the morning. He said, the tape will recover. It did recover across the Friday morning. Let's see where we are at the Friday close and into the weekend. Ben Laidler on the market.
Listen, I think the fears you're seeing right now are much more about the sort of symptom of the big rally that we've had than they are cause for fundamental concern. The fear of the unknown. We feel we've seen this movie before, whether it was SVB in 2023 or 2008. High yield spreads are at 5-year lows. The regional bank heavy Russell has just ripped. But let's take a step back here and take a breath.
Please.
We have literally just had all the big banks reporting. And the results are good and the capital levels are strong. The regionals, which is, the focus of this right now, are much better positioned than they were even as recently as 2023, both on the capital side and the provisioning side. The economy, if you believe the nowcast, is growing at 3%. The Fed has started cutting. I think at the end of the day, we're going to look back on this, if we can even see it in the chart, as an idiosyncratic event. You talked about the VIX later. VIX at 27. It's clearly been wider before, but that's a one standard deviation event. It's historically paid you to lean against that and be dribbling money into the market.
Let me review. Ben Laidler of Brandesco, he was with HSBC. Christmas of, I'll say 4 years ago. I'm sorry, I can't remember, folks. And the market was horrendous. There was a Christmas Eve rally. Ben Laidler nailed it. He has been participating in this equity market. He has said, stay on board. He has given us month-to-month optimism from Brandesco, Benjamin Laidler there this morning. I need to say thank you to the team. It's always difficult to do this. Everybody's schedules are crazy, particularly the remote yesterday at the Council on Foreign Relations with the Governor Waller of the Federal Reserve System. We're out on Apple Podcasts, on Spotify, on YouTube Podcasts. A single best idea.